Hello everyone, this is Monica Main again, and this is part 2 to my Secrets to Business Credit video series. And mind you, this is what we have for the latest updates as far as building business credit for 2015. And unfortunately, a lot of my students, they like to look at the copyright date of everything, and so they think that, oh, well, if it's 2016 or 2017, this stuff is, old and, out of date. And the answer is it doesn't become out of date until time progresses and major changes have occurred in the industry or with regard to actually how to build business credit. And so if you're picking up this video set and it's not 2015 anymore, please note that until there are significant changes in the building business credit industry, including but not limited to Experian Business and Dun & Bradstreet, then you don't really necessarily have to wait for something that has a current copyright date as far as when you are residing right now or living and breathing right now, because a lot of this stuff with regard to building personal and business credit doesn't really change that often. So this is the reason I'm coming out with this update, is because things have changed a lot in the last couple of years, but this stuff will probably stay pretty close and true to how things are going to be for the next several years. And of course, when there's major significant changes that you need to know about, I will be coming up with an update at that time. Okay, so as you know, in the last video, we were talking a lot about Experian Business, some of the basic setups, the difference between the Experian Business and the DNB system, which, by the way, when I talk about Experian Business, I'm also talking about TransUnion and Equifax. There are two systems as well, but they haven't really come fully on board. When they do come fully on board, again, not a lot will change. It will just simply mean that you will have additional business credit reports that you can actually view, but the entire system is still going to be the same, which is to reflect basically how personal credit is built, the same way it would be with business credit through your company EIN. So in this particular video set, we're going to be talking about the Dun & Bradstreet side, and when and how you would be considering that, and why you would be dealing with Dun & Bradstreet, and at what point in time you should consider dealing with Dun & Bradstreet. So this is how it works now in 2015 and beyond, and when and why you would be dealing with the Dun & Bradstreet system. You have a personal mid-FICO at or higher than 720. You have an S corporation that is 2 years or older. Your corporation has filed taxes for the last 2 years, and those tax returns don't just show zero, they actually have some kind of business activity. This is why I tell my students who are actually going forth and doing an internet business, for example, or they have some other type of business that they've been doing for a long time, or maybe they are, starting one of my other aggressive income types of businesses. Use that business as a means not only of protecting yourself, or as they say, the corporate veil goes, to protect yourself from personal liability on any and all business activities, but also use that company as a means of building business credit, because the big crux of going forth to the next level on building business credit is going to have everything to do with your business activity. The reason being is because a bank or lender, you have to understand where they're coming from. They're going to be looking at your business going, why does this person need the money for the business? And unless you're actually a startup from the ground up, which a lot of lenders don't like to lend on, they're going to expect to see that there's some kind of gross proceeds going through your business, which, some of these banks will actually ask for bank statements. Some of them will ask for tax returns, personal and business tax returns. Some of them will ask for all of the above. And so you can't have just zero going through your bank account. You can't have zero on your tax returns. And so they're going to be looking for the last 2 years. And this is why, again, I think it's an ideal situation for those of you that are looking for, an extra stream of income, to definitely get involved with some kind of aggressive income business, even if you're only trying to build business credit, because it will become a very, very significant piece of the puzzle as we go along with building very sizable amounts of business lines of credit. You have to have decent personal tax returns, meaning that you have at least shown a minimum income of $50,000. So if you're going to be showing that you're some kind of welfare recipient or making $10,000 a year, that's not going to work. And $50,000, that's scraping the bottom pretty low. So, I like to see it above that, above 100 if possible. But 50,000 is, reasonable for most banks to see. And then you're going to also have to have a minimum of 3 business trade accounts And these do not include your credit cards. So, for example, there would be trade accounts that wouldn't report to the Experian business for you, such as Uline.com, printers, shipping companies that you're dealing with, including FedEx or UPS. Those are different trade accounts that can report to Dun and Bradstreet, but again, they're not going to report to the Experian business system. Okay, so how Dun and Bradstreet works is that you basically have a Dun and Bradstreet profile. The easiest way, obviously, is to pay for your profile, meaning that you can actually get a profile set up, and I think the base bottom minimum is $229 for right now. I think there's a deluxe package for $599, and then there's that $99 a month thing, which will run you over $1,000 a year now. So that's what you're looking at as far as expense goes. But there's additional expenses too that you're not aware of. That's just the bottom line expenses for now. There's a lot more as far as expenses go as you go along with Dun & Bradstreet. So that's why I tell people to focus on the other system, the Experian business system first, before going forth with the Dun & Bradstreet system, because it takes a major level of commitment when you get to that point. Okay, so in order for you to be able to actually start the process with Dun & Bradstreet. I mean, don't even consider opening up an account. You can get your free DUNS number and all that other good stuff, but don't actually go forth with setting up a profile until you actually do have 3 trade accounts. Once you have your 3 trade accounts, you can keep adding and adding your trade accounts as time goes on. But again, this is a lot of groundwork and footwork that you have to personally do, which I think is ridiculous, because if it's a credit reporting bureau, like a regular credit reporting bureau, then you should not have to be doing all the work. The credit reporting bureau should be extracting this information from the creditors, just like any other scenario. So that's why I have problems and issues with Dun & Bradstreet, is that you have to keep up on all this stuff. But of course, Dun & Bradstreet does offer a very, very expensive package. As I was mentioning in the last video, they'll charge you, $9,000, $12,000 for different packages where they could set up all the credit accounts for you. But again, you still have to provide them with all the data. They're not just going to invent trade accounts for you. They're not just going to pull stuff out of the sky, because legally they can't. So they're still going to have to ask you to corral up all of your information and get all of this information together so that they can actually do it for you. I don't see the difference between you doing it or paying them to do it, because you still have to come up with all the data to begin with. So while you still have to come up with all the data, you should very well just type it in there, because you're basically just paying them $9,000 to type in the stuff, and I don't see that as being of value whatsoever. So, you do need to have a DUNS number, which, if you have something along the lines of a business line of credit or a business credit card that is asked for a DUNS number, then that means that they're going to be automatically reporting it for you. Otherwise, they're not going to ask for the DUNS number if they don't plan on doing that. And usually when you're getting into the business lines of credit and so forth, they're going to be asking you for that DUNS number in addition to your EIN number. And so you do have to at least have that so that they can start reporting it. If you didn't, in fact, want to go through the process of getting the 3 trade accounts and all of that, then you could just use that system, which would again be almost comparable to the Experian business system, in which they would be reporting the stuff for you automatically. But any and all small trade accounts, they're not going to be reporting it for you. And then, of course, this should go without saying, but sometimes people just don't get it. It's almost like when people have to have signs in the bathroom to remind them to wash their hands after they use the restroom. It's like, it should go without saying that you wash your hands after you use the restroom. However, it's nice, I guess, to give people reminders, because believe it or not, they forget. So this is one of those things where it goes without saying that you should probably pay your bills on time, but some people just don't. So this is what's going to screw up your credit really bad if you do not. Therefore, I'm going to tell you, pay your bills on time. All of your bills for your personal and your business credit should be paid on time. And then, of course, you want to build your PAYDEX score to 85 and above, but that's just not the only element. I have a lot of students that are like, yeah, but my PAYDEX score is, I've had a student tell me that their PAYDEX score was 100, and yet they weren't able to get any credit. It's like, well, but that's not the only criteria here. There's a lot of other elements and pieces that have to fall into place. You could have a PAYDEX score of 100, because 100 is the max. But what if your credit is only a 650 FICO? What if you have no tax returns for your business? What if you, I mean, there's other elements that banks have to see. So it's not just all about the paydex score. There's a variety of other factors that you have to consider here. Of course, seasoning and constantly keeping up with your credit cards, constantly paying your bills, constantly having business activity, obviously filing your taxes for your business, all of this stuff, all this activity and this seasoning will obviously pay in the long run. So when you get your first S corporation, and again, you don't have to, this is a non Dun and Bradstreet strategy, as we were talking about in the last video, but you can get your first 3 to 5 unsecured business credit cards, and then you can use the credit for 6 to 12 months, and then you can start a second corporation and get another 3 to 5 business credit cards. You're not limited to only one S corporation or one umbrella corporation. You can have multiple umbrella corporations so that you're not over leveraging yourself, because one of the first things that they're going to notice is that you have a lot of credit cards, if you have a lot of credit cards for one particular business, but they segregate each business, separately. So they're not going to say, well, how many total business credit cards do you have total? You could have 5 different companies. They're not going to ask you that, but when they notice that you have 20 different business credit cards, which you're probably not going to get to that point for one company, then you become then a credit risk at that point. And then it's harder to get business lines of credit and so forth when they do pull your Experian business credit report. So the better strategy is to start a second and possibly even a third S corporation, to whereas you can leverage yourself a little bit better, not look like you're over leveraged, and become, you don't want to become a credit risk in the eyes of a potential bank or creditor. So a lot of people don't understand that when they're getting all of these different business credit cards. You can get as many as you want, but at the end of the day, when you do start to apply for those business lines of credit, say you do build your Dun & Bradstreet profile really nice, you get to have 100 paydex score, you do have activity for 2 years, you have, 2 years tax returns for your business that look really healthy, you have 2 years personal tax returns that look healthy, you have a 720 mid FICO, and all this other stuff. But if when they actually do pull your Experian business and they notice that you have, 5 American Express cards, 3 Bank of America unsecured business credit cards, all these different credit cards, they're going to be like, what the hell's going on? Why do you have all this stuff, So you're going to have to minimize it a little bit per company. I would max out at 10. You can go a little bit more than that, but max out at 10. Otherwise, they're going to be really suspicious as to why you need all of those credit cards. And so when you start over with a second corporation, they're not asking you at that point in time anything about the second corporation. In fact, they don't even know about it. And even if they did know about it, they're not supposed to be asking you, because it's not going to come up in the Experian business report, because that second corporation's got its own EIN, which then means that it's its own identity. So what I like to do, here's a little trick that I do. When you have 2 corporations already set up, or 3 or 5 or however many you have, when you actually, and I did this with my Bank of America transaction that I did a few months ago, where I actually had Bank of America pull my credit for one company, and that was the consulting company, which I told you they gave me a paltry $7,000 for unsecured, just because it was, I said it was consulting. I should have said it was something else. And then at the same time, I had them pull my credit for the other business, which was the LLC for the real estate stuff. And that's what they gave me, a massive amount more than what they gave me for the consulting company. And so when they actually pull your inquiry, they do like it's going to be a hard inquiry on your personal credit report, which actually does take away points off your FICO. But when you do them at the same time, then you could easily have one removed, and most of the time the second one doesn't count anyway, just because of the fact that you do have, they do have like this, almost like this grace period, and the grace period varies depending on what type of loan is being pulled. Like for example, if it's a car loan, I've heard that the grace period, and again, I don't know the hard facts of this because every credit reporting bureau is going to have different regulations and policies on this, but you have a grace period anywhere from a few days to a week. On mortgages, there's a grace period anywhere from 2 weeks to 30 days, where you can have different mortgage companies pull your credit, and it's only going to count as one hard inquiry. So, that's a trick that you could use when you're doing these business credit cards, is if you do have a second corporation set up, you can actually apply for the same card twice for both corporations. It's going to be hard to do this with the Costco card, for instance, just because it's going to be hard to be, convincing the lady behind the counter that you have two different companies. But any other type of credit card that you're going to be applying for, you could apply for the same card twice, but with two different companies, so that way you can actually get double the credit or even triple in some cases, depending on what they're going to give you for each company. But you're only going to be having your credit report, your personal credit report, pulled once, and you're only going to have to deal with the hard inquiry one time. So that's just a little secret. And then you keep repeating the process. They like to see that you use their credit card for about 6 months and have some activity. Don't just like, get the credit card and throw it in the bottom of your desk drawer. You actually do have to, buy stuff with it. And I like to buy stuff and pay it off every month. My whole thing is, even though I'm a big fan of building business credit and, having the credit available, I actually am very solvent and I don't like having any kind of debt. So, unless it's a constructive debt like, real estate mortgages and so forth, I'm just not a huge fan of debt at all. So I actually do pay off most of my credit cards multiple times a month. Like I'll do like a bi-weekly thing, for example, on most of my credit cards, but I do make sure that I don't have any kind of balance on all of my credit cards, except for the ones that I'm actually getting a deal on. I don't know if you remember, I told you I was doing the deferred interest on a couple of my credit cards, in which case, yeah, I'll pay the bare minimum until I have to start paying interest, and then I'll make sure that the remaining balance is paid in full before the interest starts kicking in. I don't like paying interest. I think it's just highway robbery. It's bad enough that, the mortgage amortization schedule is a full-on rip-off and scam. So the last thing I want to do is pay banks more money with interest. So I like paying everything off, every month, which also does a really good deed for my business building credit activities, because they could clearly see that I like to be solvent. I don't like to carry debt, and that gives them a sense of security. At the same time, though, a lot of banks don't like that, because that they mean that they know that they're not going to be able to make any money off of you. But at the same time, you're not high risk. You're much lower risk, and they will always lend to the lower risk party versus the higher risk party. Okay, so your umbrella, your umbrella S corporation is never going to actually own any property in and of itself. Just like you're not going to run out and buy property under your own personal name. It's actually not going to be titled like that. It will help purchase the property, but it's actually not going to own the property. So here's how it works. You have your umbrella S corporation in your home state with the business credit. You have the property in whatever state you wish to form your LLC, because the LLC for the property has to be in whatever state you're investing in. So for example, I'm in California, so my S corporations are in California. But my property LLCs can vary depending on where I'm investing. Right now I'm doing a lot of Michigan deals. In the past I've done a lot of deals in Georgia. And so basically any and all additional LLCs I get in Michigan, for example, my S corporation in my home state of California is one of the entities in the LLC, and then I personally am the other entity in the LLC, which means then that it now becomes two entities in one LLC, which means that you are abiding by all the rules and regulations and policies as set forth by the IRS. So you're not considered a single member LLC. And yes, that is 100% legal, because your S corporation is its own entity. And so that is how it's done. That's how you use the umbrella corporation. And so you could pull the credit that's built up from the S corporation as well as your personal credit, and completely and totally bolster your chances of getting a much lower interest rate, because you're essentially using two parties in the transaction that have really good credit instead of just one. And so that makes it look a lot better. Of course, it doesn't matter whether they know that you're the only sole owner of the S corporation, because they're not looking at the corporation as you. They're looking at the corporation as having built business credit as if it's its own entity. So that's how that works. So why is it set up this way? Well, obviously best mortgage interest rates, as previously discussed. But the main thing, though, obviously, is to make sure that you have your two entities to be IRS compliant. Because again, I don't know about you, but I really don't like getting letters from the IRS because I'm not doing things correctly. So obviously, before getting set up with DNB, as we had sort of already started to discuss, you need your S corporation or LLC. Again, the only time you're going to use an LLC as your umbrella corporation is if you actually do have a physical partner, but it's never a good idea to leverage yourself this way. And the reason being is because if you have a spouse, for example, and this spouse has really good personal credit, and then you have either marginal credit or you're working on your credit, or maybe you have decent credit too. And so it doesn't make any sense that you throw both of the two good credit parties into one boat and only leverage yourself once like that, rather than sort of separating and splitting up and then having the same amount of leverage separately. It's almost like you could double the amount of power that you have with financial leverage if you keep yourself separate. So if you do have an LLC with a spouse, whenever you do deal with any kind of transaction with real estate, they're going to pull the credit of everybody on that LLC, especially if you're using the credit of that LLC as one of the entities in the new LLC. And that's not a good idea. I mean, because why do it that way when you could have your own S corporation with your own credit, and you have your own entities set up, business credit and all that, and then your spouse can do the same thing with his or her own S corporation, so that when you buy a piece of real estate, you use your S corporation as one of the entities and using the business credit as well, and then you use your own person as one of the entities for your new LLC and your own good credit as well, and you're keeping your spouse out of the whole transaction, which means that when you're getting smaller size properties, anything that's under $1 million, you're going to be dealing with something called a recourse loan. And a recourse loan does end up on your credit. It will also end up on your S corporation's credit as well. So after about 7 properties or so, you're going to hit a wall, is what they call it. You hit a wall where you basically cannot get any more properties. They consider you maxed out at your leverage. So it doesn't make any sense then that you would throw your spouse into the same boat and make him or her hit the wall at the same 7 properties when he or she could have had their own 7 properties separately, and you could have together had 14 properties. Instead, since you were in the same boat from day one, you're both stuck at only 7 properties. That's it. And there's ways around that, of course. You could, if you bought your properties in one central location, you can get something called a blanket commercial loan, where you can actually lump all of your smaller properties into one larger commercial property. And a lot of times that commercial, if it's over $1 million, that commercial property could be, a non-recourse loan. And a non-recourse loan doesn't end up on your personal credit, which means then that you alleviate all that stress and strain of hitting the wall at that point. And so that's one of the, I guess you could say, downsides of owning smaller properties. I tell my students who are getting started in real estate, go with units that are 24 units or less. Well, a lot of them are a lot less than $1 million unless you're buying in Malibu or Beverly Hills. And unfortunately, you're going to be hitting a wall very quickly. The good news, though, is that a lot of my students realize very quickly on that you don't need 100 properties to be able to retire in this business of real estate. You only need between 5 and 7 properties usually anyway. So, you don't need as many properties as you think you do to be able to make the cash flow that you're looking at for financial freedom. So I think there's a misconception a lot of the time when people are getting started in real estate, is that they think that they have to, somehow get, 50 or 100 of these small properties, and the answer is no, you don't. Usually the sweet spot is about 7, but it just really sucks that you do hit a wall at 7 a lot of the times, and so then you have to either find ways to pay off the other properties or lump them together in a blanket commercial loan, or maybe ditch out some of the smaller bread and butter properties to go with a much larger property. So, for example, if you do hit a wall at 7, maybe you sell 2 of the 7, and then you have 5, and then you use all the proceeds from those 2 to dump into the down payment for a much larger property, in addition to using your business credit to maybe raise some of the capital for the down payment for your property that's over $1 million. And by the way, $1 million, the property itself can't be $1 million, because usually there's a 20% down payment. So that would only bring the loan amount to $800,000. So your property is going to be, over the 1.25 million mark to be able to clear your down payment, because the loan size itself does have to be $1 million or over. So if you're getting $1 million property, your loan size is only going to be about $800,000. It's still going to be a recourse loan. So you want to make sure that your property price is somewhere over the 1.25 million mark. So you'll probably be looking at properties that are 1.5 million and over, because by the time you're done negotiating down on the price and so forth, you'll be at where your loan size needs to be a non-recourse loan. So again, it doesn't ever make much sense to me to do an LLC as an umbrella corporation, but I threw that in there just in case there's a couple of you that just want to do it that way. And then of course the EIN, which we discussed, is the Social Security number of your corporation. business, a real business, or a virtual office address. And this is where it gets expensive, because if you don't already have a brick and mortar business address for the business that you're running now, then you're going to have to get what's called a virtual office, which can cost hundreds of dollars a month. And this is what you're going to need to show Dun& Bradstreet that you're a legitimate business to get a higher ranking with them. And that's why I tell people, if you want to get started with business credit building, you could do a lot with just working with the Experian business system and not going this level up to the Dun & Bradstreet system. So again, we're working solely right now on the Dun & Bradstreet system. And if you wanted to stop with what I was talking about at the last video, then that's completely fine. But to alleviate any confusion here, we're talking now for the Dun & Bradstreet system, not for the Experian business system anymore. You'll need a business phone number, which has to be piped into either your physical business address or your virtual office address. Business email address, which would be like a domain name that would reflect your business address. So it'd be like, customer service at, mywebsite.com. Or even better, if it's your personal name, since you're the CEO of the company, Steve at mywebsite.com or whatever it is. You can get a toll-free number, which is optional, but it does make your company look a little bit bigger. That's the cheapest. The cheapest of these are going to be your email address and your toll-free number, believe it or not. And then you need a total of 3 trade accounts that have to be up and running for at least 30 days. Otherwise, when Dun & Bradstreet comes calling or sending letters to these creditors, they're not going to be able to give them any kind of credit history if you just opened up their account, last week. So if you have excellent personal credit now and you're ready and you're willing to do, the Dun & Bradstreet profile, and you don't have a 2-year seasoned S corporation, then consider getting what's called a 2-year shelf corporation. Again, it has to be in your home state. This is again where it can get pricey, because these shelf corporations, people ask me all the time, well, how much are they? It's like, I can't answer that question. It's almost like when somebody asks me, well, how much is a 10-unit apartment building? It's like, well, where? You know what I mean? Are we talking about one in New York? Are we talking about one, where exactly? So again, the same with the 2-year shelf corporation. Where are you located? I can't tell you exactly how much it's going to cost, because every state is going to be different. You can get some cheaper low-level ones in Nevada pretty much all day for maybe $2,500, but whenever you're dealing with other states that don't specialize in setting up, shelf corporations, it's going to get more expensive. So, you might be talking, the average should be around, between 2,500 and 5,000. You shouldn't be paying more than 5,000 for a 2-year. If you're going to be paying 5,000 for a shelf corporation, it better have more than 2 years on it. And make sure also too that there's no liabilities. Some of them will actually have pre-built-in trade accounts for you. Make sure that they've filed all of their tax returns. And there's things that you need to make sure when you're actually looking at a shelf corporation. The main thing is that there's no liabilities, that they filed all of their tax returns, and it would even be a plus if they did have a couple trade accounts and already a DUNS number for you. But that's that's not going to be the case in most cases. So Dun & Bradstreet rules about your business address that again do not apply to Experian Business. So do not confuse the two, because this does not apply to the Experian business building strategies. It's best, obviously, to have a brick and mortar business address. That's the best option. If you know somebody who runs some kind of store or something that's willing to let you have their address, that's the best option. And then you can even add a business phone line to that address. Even if you never use it, you could have the phone company set up a phone line that goes to either, that actually just automatically forwards to your cell phone or goes to a voicemail. It's better to have it forwarded to your cell phone. So they don't actually have to. This is a trick that a lot of people don't know. And the reason I know this is because I've moved different office locations so many different times. I know how this works. You can have a phone line that is piped into any physical location, but there doesn't have to be a jack. There doesn't have to be a phone plugged into the jack. You could then pay a little bit extra to the phone company to make sure that all calls that go into that particular line are forwarded automatically to whatever other line you want. It could be a Vonage line that you have at your house. It could be your cell phone number. It could be anywhere. But you do need to make sure, though, that you do answer it professionally. So my advice to you is to get an answering service and then just forward it over to an answering service that's going to, answer your calls as your company name. Hello, thank you for calling ABC, whatever. How can I help you? You know, I mean, you could pay for an answering service, and a low-end answering service is going to run you $50 a month. So again, this is all going to get really, really expensive if you want to do it the Dun& and Bradstreet way. But it will also allow you to start tapping into very high level, um, very high levels of business credit, if you will. Okay, your second option obviously is to have the virtual office address, which isn't my, my best option, but um, some of them will actually allow you to rent a small office. But these are really, I know in Southern California they're really pricey. It's actually cheaper to go to like a person who's just renting small offices in his or her office building rather than going to a virtual office location. But the cool thing about a virtual office is that they actually do offer you additional services, like they will have the secretary that answers the phone for you. They will have a conference room if you need it to have meetings, and they have all this other stuff. So it's mostly for somebody who actually has, like, say they're starting off and they have a law firm and they're just starting out. That's basically what it's for. But they also have virtual offices where you don't have to rent an actual office. You could just basically rent their address, but that's still going to set you back a couple $100s a month depending on where you are. Dun & Bradstreet, they actually go through the painstaking process, especially since it's become so ridiculously easy with Google Earth these days to figure out exactly where you are now. They actually do a search to see where you're at and to actually make sure that you do have a commercial location if you're claiming that you have a commercial location, because they will actually ask you in the application process when you're going through the profile whether you actually have a commercial location, and then they want to know what the size of the commercial location is. Um, I usually tell them it's a couple thousand square feet on the low end. I don't ever tell them it's, a postage stamp size 150 square foot, office. But that's up to you on how you want to handle putting in that type of data. You don't want to ever use your home address. Of course, this also applies for Experian Business, and you don't want to use a post office box address. And a post office box, to be clear, is the one where you walk into a government run post office and you get a post office box that says PO Box da 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 da, and then the city, state, and zip code. That is a post office box. That is not what you want. That's not the same as getting a street address from, like, say, the UPS store or one of those post box places that give you a street address. It's like a personal mailbox place. It's not the same, which is okay if you're just working with Experian Business. Dun & Bradstreet rules about your phone number. You don't want any more Magic Jack. Of course, it could be used for Experian Business. Vonage you could be using for Experian Business, but not for Dun & Bradstreet. You need a real business line. You can't be just shoving it off to a voicemail, because that just doesn't sound like and sometimes Dun & Bradstreet will call. In fact, they always like to call to be able to upsell you on different services that they have. And they're going to know right away that you're not a legitimate business if you're doing all of this shim-shammy type of stuff. Um, Rules about your email address, it should be very professional. Again, for Experian Business, you could literally have something like franksflowers@gmail.com or whatever the name of your company is, or ffdirect@yahoo.com. It doesn't matter with you do have to have a separate business email address with Experian Business. It shouldn't be frankwilliams@yahoo.com. It shouldn't be something personal, but it should be a business email address. You should keep your business and your personal stuff separate. But when it comes to Dun & Bradstreet, you do have to up it a notch, and you do have to be a little bit more professional as far as what your email looks like. Your 800 number. I like to get the ugly 800 numbers is what I call it. You don't need any vanity numbers, because those will actually set you back. So you go to like cal8.com and you can pick out a $5 800 number. 888 and 877 and 8666 makes it look like you're a newer company. Although I would lean toward getting an 888 number. I've had 888 numbers before, so either an 800 or an 888 number is acceptable, but I would not do the 877s or anything like that. So rules about your profile: you use a business address. Don't ever put your home address and then later change it. You want to have your virtual office or your brick and mortar business address set up before you start the profile process. You have your business phone number. Make sure your annual gross revenues are accurate. Make sure, because I've had students make this mistake, where unless you actually have gross revenues over $1 million, make sure that you put under $1 million. Make sure that your amounts are odd rather than exact, otherwise it's going to raise a red flag. You want to make sure that your operation is reasonable in size, so you want your employee number to be under 10. You want to start the year of your corporation, and hopefully it's 2 years old, because if it's not, I would go back to square one. I wouldn't even get to this point. You want your start date to be, or your start year to be 2 years. This is why I tell people at the very end of every year to get a corporation. Like, for example, say it's October, November, December of 2015. Get yourself a corporation, because you can use it as if it was formed in January, because they're not going to know the difference, quite honestly. So, and then you start rebuilding your personal credit, maybe all through 2016, and come January 2017, you can actually start your process of getting your Dun & Bradstreet profile set up. And technically, it's a 2-year company at that point, because even though it's January 2017 and you set it up in December 2015, it was still set up in 2015. It still has a stamp date of 2015, and so that actually can be considered or construed as being a 2-year-old company. Okay, so they'll put you in on their package, their bottom line package, which is $229. They have a $99 program. I'm not a big fan of any of this stuff, and ever since I had that conversation with that one guy, the Dun & Bradstreet Credibility Corporation guy at the trade show I was telling you about a couple years ago, I basically canceled all of my services with Dun & Bradstreet. I don't really give a damn about Dun & Bradstreet anymore, just because I don't need to get the types of business lines of credit that some of you believe that you need to get. And the reason I say you believe you need to get is because maybe you're thinking, okay, well, I want to get that $10 million piece of real estate, so I want to be able to get, a $2 million business line of credit. Well, it's going to take a lot of work for you to get to that point, but you're going to have to do that work through Dun & Bradstreet, and it's going to take you a couple years to do it. And you could definitely pull it off. I have no interest in doing that. I mean, I'm not interested in $10 million deals anymore. I used to be, especially when I was doing all my partnerships, especially when I was doing all my Texas real estate deals. But nowadays, I've sort of relaxed a little bit. I think a lot of it had to do with the fact that I had my daughter, and, I don't feel that there's just this pushing huge need anymore to be getting these huge types of deals together. So it's no longer important to me. And that's part of the reason why I stick traditionally and typically I stick with properties that are 100 units or less now. Just because I've had properties that were hundreds of units in size, and they're just very stressful to manage and deal with. And one of my most recent purchases was a 76 unit apartment building, and that's even considered big for what I've been doing lately. And I don't need a lot of money to be able to do all these types of deals. So I don't find the need to be building this sizable amount of credit, especially as I'd mentioned before. I try to stay as solvent as possible. But I do know how to access the credit that I do have, which is sort of how I showed you in the last video, of being able to just get a bunch of unsecured business credit cards and just tapping those out if that's where you need to get the money from, rather than doing all of this stuff to be able to get business lines of credit, and also starting with small business lines of credit and ratcheting them up as you pay them off. The bank has no problem giving you more money if they know that they're going to continue to be getting paid back. So that's the secret strategy to being able to do this quickly and easily without having to go through this painstaking Dun & Bradstreet process. But obviously I told everybody I would talk about this because, everybody wants to know how to do the Dun & Bradstreet, because they still have that old thinking that they are the end all be all to building business credit, and they're not. A lot has changed, and they are not. In fact, I would predict that Dun & Bradstreet is probably not going to be on the map anymore in 10 years from now. So just think in terms of that, because once Experian Business blows up to its fullest capacity, once TransUnion and Equifax have their their business strategies in place, I think Dun & Bradstreet will find that their days are over. Also, too, their biggest moneymaker is trying to extract money from you guys. And to me, that's not a legitimate business if they are a true cornerstone for building business credit and being business credit reporting companies. Their biggest moneymaker should not be off of you and off of subscription services. That just doesn't make any sense to me. So this is how what you'd be focusing in on, is the type of things that you're going to be filling in. These are all of the questions that they ask, and I know that because I've gone through their applications multiple times. They want to know who owns the company. Is it you, or is it you and a partner? Your title, you're always the CEO. Your address, and you always make sure that you mark that it's a commercial location. they want to know the size of the building or the unit. They want to know who you sell to. Do you sell to wholesalers, retailers, the general public? And then the number of employees, including yourself. Do you always want to put one employee? No, that's not going to make you look good. But like, put 3 or 4, and it could be, your lawyer and your accountant, and all those other people can be considered employees. So you don't have to give them payroll records to substantiate how many employees you have. They're not going to check all that stuff. So you don't want to be just one employee. When they do ask, they actually ask for projected income. I had one student argue with me about this, and I'm just like, no, I've done these applications multiple times. I know how they work, and I actually went through the entire application after the student was arguing with me at a seminar, and found that I was correct and she was not, because they do actually do still ask for projected income. And technically, you can say whatever the hell you want to say, and they're not going to argue with you. So here are some other credit resources, or credit reporting bureaus, I say, if you will, and they all, report through your EIN. So this is exactly what it sort of looks like when you start the process of, getting your Experian business report. This is where we are. To take a look at what your credit report looks like. And this is after you've been sort of going through the process of building your business credit. You can't get this report and pull it, 5 seconds after you just get your new EIN. Otherwise, you're going to be wasting your $50 on pulling your credit report. But if you know you've been building credit for about a year or two, you might want to do that. So here are some credit cards and accounts that you could use for both Experian and Dun & Bradstreet. I like Office Depot because Office Depot is just an Office Depot card. You actually go in there, and it's one of the easiest cards to get. I should have mentioned this on the bad credit, for the bad credit people that are trying to build business credit. In addition to getting your secured Wells Fargo card, you should also consider getting an Office Depot credit card too, for your business as well. It's fairly easy to get, and these are only Dun & Bradstreet ones. They're like considered trade accounts. These are, of course, all the accounts that are not accepted by Dun & Bradstreet or Experian Business. So you can't use any of these accounts to be able to build your business credit. So that's basically it. As I had mentioned before, most of you should probably consider only and solely building through the Experian Business System, which is a lot more cost effective. It's not nearly as costly as what it's going to be when you're dealing with Experian Business, or I'm sorry, with Dun & Bradstreet. Experian Business is definitely going to be the leader in business building credit, and but Dun & Bradstreet is not. So all the hoops that you have to jump through and all the money you have to spend for Dun & Bradstreet, that's all pretty much going to be nil anyway, because you can get a sizable amount of credit when it comes to just using Experian Business, and of course TransUnion and Equifax, which is now coming up to speed on the business credit side. And so that means that you only need to have your street address, UPS store address, your personal mailbox address, a separate business phone number, which can be Vonage, and it's just very, very cost effective to set it up and set it up quickly versus having to go through all the hoops at Dun & Bradstreet, and then of course doing all of their work and reporting all of your own trade accounts and all this other hassle. It's just not worth it. The biggest key that you need to understand is getting that first line of credit, that really low line of credit. I don't know if you remember in the last video, but I was telling you, if you have a Wells Fargo account, you could start at a $10,000 business line of credit. If you're at a Bank of America, if you have that, you could start at a $25,000 business line of credit. So if you're on that threshold of credit, or maybe you think you have decent credit, but you're not sure it's decent enough, like you're not over that 700 mid FICO, then go to Wells Fargo and try to get their business line of credit. Get the $10,000 line of credit, and they're not going to care if you're a business startup or not. You just explain, if you have decent personal credit, then they're more than likely going to give it to you without any tax returns or anything else. And then start slowly but surely upping that limit as you pay it off. So after you use the credit, borrow the whole $10,000, pay it all off, and then in 6 months say, can I have 15? Can I have 25? Can I have, and keep going up, and pretty soon you'll be up to 100,000 and 200,000, and they're not going to even pull one single tax return at that point, because you'll have shown them a payment history just like with any other account. And that's the secret of doing it and getting into these bigger lines of credit. It's not through Dun and Bradstreet. It's not, it's not with all this other stuff, which was the old way, which was just merely 2 years ago. So if you understand that you can now use the Experian business system instead of Dun & Bradstreet, you'll find that it's going to be a lot easier and quicker for you to start building stellar business credit. This is Monica Main signing off, and I'll see you at the top.